Good afternoon, guys. How are you doing? Still awake? I know you just ate, so. Okay, that's very exciting. Good to hear. So just as an introduction, and I'll let these great panelists introduce themselves. My name is Daniel Cawrey. I've been involved in the Bitcoin, blockchain, cryptocurrency, I'm never sure what to call it these days, industry for about 4 years. I started out writing as an editor for CoinDesk. I now have a company called Pactum. We do over-the-counter derivatives. So if you or anyone you know is involved in the cryptocurrency industry, has a lot of cryptocurrency, we'd be interested in helping you hedge that risk. And then I'll let these great panelists go ahead and introduce themselves.
Okay, and I'm Mike Lempres. I am at Coinbase, which I hope most of you know by now, but we are the nation's largest digital currency brokerage and exchange business. My role at Coinbase, I'm the Chief Legal Officer and Chief Risk Officer. And background prior to that, I was with another digital currency company called BitNet and came from Silicon Valley Bank. So I've been working in this space for, 4-ish years now, which is, dog years around here, so that's a good long period of time.
Okay, I'm Veronica McGregor. I'm a partner at Goodwin Proctor. I specialize in fintech and do a lot of work in the virtual currency and blockchain space, especially around regulation or, like proposed regulation, likely regulation. So I guess I help you hedge risk in a different way than he does.
I'm Jax Ava. I'm managing partner of Day One Investments. We are a seed and Series A investment fund that's sector agnostic but blockchain specific. We believe that regulations and efficient infrastructures are going to stifle innovation and implementation respectively. So we are creating public and private partnerships in emerging markets to bring our investments in and really help them get battle tested as the technology scales and when the markets are ready, bring them back this way.
Hi everyone, my name is Yang Chu. I'm an innovation futurist with Deloitte. In case you don't know, we are one of the largest professional services firms in the world, and I look at all sorts of emerging technologies and from two angles. One is how it can be leveraged for risk management, and on the other side, what risks get introduced, whether we're talking about strategic risk, operational risk, financial, technology, as well as regulatory risks. Okay?
So I want to start with innovation. Let's start with innovation first, okay? So I just came back. I don't know how many of you were in New York last week for Consensus, but I was there. There was a lot going on, lots of innovation in this decentralized world. So I'll let you start, Yang, some of the things that maybe you've seen maybe in the past 6 months or so that's been really innovative, really interesting.
Yeah, so being a professional services firm, we're kind of in a very unique place to kind of observe this market evolve. Obviously our clients are the Fortune 1000 major government and plus major government entities, et cetera. So we see a lot. And I would say some trends that we're seeing in the past 6 months or so is huge increase in interest in blockchain in areas that we hadn't expected, quite frankly. We had a blockchain strategy that we put together a year and a half ago, and been surprised. There's a lot of public sector interest, right? So this idea of public sector being slow moving and technology versus, it's not been the case. We're also seeing a ton of interest in the energy and resources sector. Who knew until you start thinking about the number of transactions that occur among the complex number of parties that are involved. So lots of activity happening in across a huge variety of sectors.
Yeah, go ahead, Jack.
So we're seeing a lot of innovation as proof of concepts within large organizations, and we're seeing a lot of innovation at the protocol level amongst the technocrats and some of the early entrepreneurs, which has everyone very excited about the potential of this technology. So there's this really big gap between where we are and with the innovations and where we are with the implementation. So what has me most excited right now are the initiatives in Dubai and Gibraltar. So in Dubai, what they've done is they've set up an accelerator with the backing of the regulators and with implementation partners, being public and private sector, and they're saying, hey, we want to solve these problems, and then they're finding those innovative companies, helping them come in and help them procure contracts so that they can start implementing and really working. So they're aiding the innovation and helping them bring it into the real world, which has me most excited right now.
So, okay, so being an attorney, I can't really talk about what my clients are doing.
Why not?
Why not?
Just joking.
Because I can't. But I would echo that I'm seeing lots of proposed uses of blockchain, some of which are more eyebrow-raising than others, and some are very predictable. I happen to be specialized in consumer financial services, so you can imagine what those are. Obviously, the initial blockchain use, which was P2P payments, but then banks are all very interested, and I'm doing a lot of talking to banks about what they might use it for, not just the R3 kind of stuff, but what else they might be using it, what they could use it for, what's possibilities.
Okay, and I can talk to you about innovation, but I'll tell you that is not really the core or heart of where my company goes or how we see ourselves and distinguish ourselves. And the reason for that is where we start is we say we want to be the safest and the easiest to use, right? That's where we go. And that is a little bit different. We're not at that cutting edge and pushing some of the regulatory boundaries or other boundaries the way some of the more innovative companies are. It's a choice, strategic choice we've made. I will say, though, that the limit on innovation is not coming from engineers' brains, it's coming from governments. And when you get in this space, the regulatory environment is pretty heavy, and I know we'll talk about that later. But what's practical and what engineers can design and build is worlds away from what governments are going to let you use. And that's a real challenge, and that's something that I know we struggle with at Coinbase, and I think everybody in the space struggles with.
So the main theme that we're talking about here is decentralization, and I really had a great experience last year. I went to the Decentralized Web Summit at the Internet Archive. I don't know if did anybody here go to that event at all? So it was a lot of people talking about the models for decentralization. But the difficult thing that I came out of that conference about is that with decentralization, it's really tough to find business models. It almost seems like one of the things that we're seeing in terms of business models is this idea of crowdfunding, or what they would say in the parlance, an ICO, raising money from cryptocurrency. I guess I'll let you go because you've got the mic, and if you'd go ahead and talk about what are the business models that maybe some of you guys are seeing in this decentralized world. I feel like it's all this crowdfunding stuff, but is there something else that the user is going to pay for decentralization?
Well, decentralization covers an awful lot. I mean, when you got a public ledger, that's what it's good at and is great at. First off, though, just as an aside, please don't use the term ICO, because what I hear when I hear someone say ICO is, SEC, please regulate me. That's what I hear when you say ICO.
I do too. That's why I said parlance.
Yeah.
That's what everybody, even being in the back, I'd heard it mentioned up here on the stage. So listen to the general counsel here, right?
So in terms of what's coming, I don't think we know what's coming. I mean, if you just look back a few months, it's incredible to see how much change has happened. And specifically with regard to companies that are seeking funding that have got different ways to get at it, this ICO issue as they talk about it, there's a number of ways that companies can access funding outside the existing regulatory structure. The practical side of it, smart contracts and everything else, very easily done. I mean, Ethereum, there's some other products that are really, really good at permitting funding, making that funding accessible to anybody on Earth. Again, I hate to be beating that drum, but it's really a regulatory issue as to what you're going to be able to do and what not do. And I think the regulators are significantly behind the rest of the market. And there's going to be a race, and Veronica's probably in it, I don't know, where there are going to be people designing structures around the regulatory space so that they are taking what already exists, what engineers have already designed, and structuring it and tweaking it in such a way that it can be implemented without regulatory approval. And then, unfortunately, that'll be challenged in 2 or 3 years down the road, and it'll be challenged in some retroactive way when something has gone off tracks, is my guess.
So, again, I can't really talk about what my clients are doing, but I am seeing a lot of almost brainstorming sessions with, like I said, with banks or even private equity or the capital markets, where they're talking about, here we have this technology, how can we use it? Let's think, rather than starting out, well, I think I can use the blockchain for this. It's can we use the blockchain somehow for credit scoring? Can we use it somehow for credit underwriting? Can we use it for, trying to find a way to use this technology? And I almost think it's like, that's sort of like that FOMO thing, like, well, we need to come up with a way to use this technology because it's the tech darling right now, and so we will find a way to use it somehow so we'll kind of create a use case to justify our investment in learning about the technology.
So an ICO is not a business model. Let's just,
Isn't?
we're not going to be living off the investors. We're not living off the everyday people. You have to add value and really build something. Unless you keep on doing it, which there are companies that just continue to raise from venture, so yeah.
So are you saying that, Jack, because you're an investor?
Not at all. Raising from VCs is not a business model. It's just not a way. You got to find value. You got to build something. There are 3 really interesting decentralized companies that I think are, I wouldn't necessarily call them decentralized, but they're taking a distributed model to their solution that are really interesting. One being IPFS. It is the interplanetary file system, and they're changing the way that we host web pages. So right now, a web page has a location. When you put it in the URL, maybe it goes out to AWS, it comes back. IPFS is working to give each web page a name that can be hosted on anyone's server. And therefore, when it does a call, it'll reward the person with the call, and it'll send it back from the closest server. That's one really interesting one. Brave is a web browser that just initiated a token called a BAT, which is a Brave Attention Token. So now, originally Brave blocked all advertising. All advertising that tried to come through your web browser, they blocked it. But now what they've done is created a way to monitor where your attention is on the page very discreetly and reward you for paying attention to advertising. So now that's flipping the model from advertisers paying publishers and that being the end of it to these tokens are kind of created based on attention, which are rewarded back to the publisher and to the user, and the advertisers get their advertised scene, which is a really interesting paradigm shift in that. And then the other is storage. So storage is a decentralized file sharing network. So if I wanted to host my thesis, if I'm a college student and I'm really concerned that I might lose this thesis on my paper, what I can do is encrypt it locally, store it on the network, on the storage network, and it can be stored in many different databases, many different computers, essentially. So me as a provider of computing space can be rewarded for hosting other people. So you create a decentralized network where people are rewarded for providing cloud computing, essentially. So those are some really interesting models that are kind of taking traditional industries, distributing who is operating the network and how they're rewarded, that I find really interesting.
So we've spent a lot of time talking to clients about business models, especially a lot of what we'll call sort of traditional businesses. And there's a lot of concern behind closed doors right now. We see this, I guess, from a few angles. From the decentralized apps, decentralized providers, certainly there's gonna be a land grab. Like, who's gonna end up being Facebook? Who's gonna end up being Friendster, right? Whoever was there first aren't necessarily gonna be established, right? Who is the de facto blockchain for music rights? Who is the de facto blockchain for like gas pipeline access trading, right? There's a lot of that kind of jockeying going on right now, and that will play out over time. I think it's very, very hard to say who will win there. For the majority of, like traditional businesses, I think a lot of operational complexity and cost are gonna go away, right? So how they differentiate themselves is gonna be different. Your bank is not gonna need thousands and thousands of people in the back office to run, and whether you can do that cheaply. It's more around your customer experience and your innovativeness of your product offering. So I think there'll be a lot more investment on the front side of that from a competitive standpoint. And then I think a lot of people aren't thinking about is this massive ecosystem of blockchain providers that are gonna have to rise up. This is beyond just, you're a technology provider, right? Blockchain technology provider. The integration of that technology, quite frankly, is much more difficult. As difficult as it is to, build a blockchain platform from scratch, being able to integrate with legacy business processes and systems is much harder. Operating that is much harder, right? Like, we're all very excited about decentralized and all of that. Well, who does the user call up when they lose the key, lose their private key, right? Who do they go to for recourse when they say the smart contract did something wrong and did the wrong thing? Who do they call up when there's incidents, right? So there needs to be a whole, who certifies who provides assurance on the technology that it does what it's supposed to do? Who certifies like the physical asset against the digital identity of that asset? There's gonna be a whole ecosystem there, and I think that's where the opportunity is, quite frankly, because there's not a ton of investment in that space right now.
There's definitely a lot, and I'll let you keep the mic because we'll just go back this way. So I really like how you brought up the whole consumer protections issues, because it's a big problem in this industry, because people don't know how to manage keys. They don't know how to deal with a wallet. Once you send a transaction, Bitcoin in particular, if you send it, you're not getting it back. On the other side, what we're seeing is with, again, I'll say the word crowdfunding because I feel more comfortable with that, is a lot of people are entrepreneurs and investors are looking at this idea of bringing up new blockchains, and entrepreneurs are just like, well, let's just start it up. Let's just build out a cryptocurrency. Let's just give it to the users. Investors are like, that sounds like network effects. But then there's the big businesses, right? They're freaking out about this. And is there something in, I want to bring up regulation. Are these big enterprises going to go to regulators and say, hey, this is unfair? Or what do you think is going to happen? Is there going to be a happy ground for these projects that kind of come out of nowhere and they're competing with traditional business?
Yeah, there's a lot of conversations happening with regulators, and in a way that the regulators are very actually excited about, that they want to be part of this discussion. There's a number of forums and coalitions of mostly large enterprises having those conversations. From the perspective of the big business, they want to make sure there's a level regulatory playing field, right? If you're a massive bank, you're under so much regulation and you feel like, oh, these fintech startups are doing X versus Y and they're not subject to regulation. From the startups perspective, they want to say like, hey, we have innovative products and ideas, but we see all these barriers to entry, and they won't let us into their network, they won't give us a node, et cetera. So they're looking for regulators to level the playing field. And from the regulators' perspective, they want to see this technology be successful, be my guess, right? They want to make sure that that path to adoption is safe, it's fair, it's orderly is a term they like to use, right? So, that there's not major systemic risks, major bumps like that along the way.
So when Bitcoin really started to take hold originally, before we got to the blockchain, before we got to decentralized ledger technology, like when Bitcoin was really taking hold, a big movement was a bit philosophical and it was a bit libertarian. And so there was this kind of sense like, this is my property, this is mine, I'm not working with anybody, the government, don't come touch this. And if you're a startup trying to build in this ecosystem, that's an awful approach to take, because the regulators are your friends. They're going to give you the guidelines of what you can and cannot do, and they don't know as much about the technology as you do. So if you can work with them and help guide it at this stage, I think it's going to be in your best interest come time to compete with the incumbents. And I think that because if you are the thought leader, if you're helping them progress and create an understanding, they'll be able to see when they're kind of the bigger institutions are trying to create a moat around their business models. Additionally, I think partnerships with the big institutions are going to be fundamental to the success of this technology. You're not going to be able to just enter and provide these services en masse. I think that you need people that they're already in contact with, create efficiencies, create solutions that they can be integrated and worked with. So I don't think that you need to run from the regulators, and I don't think you need to run from the incumbents. You just have to navigate the minefield pretty tactfully.
Right. So navigating that minefield is what I do. And in the U.S., there's a lot of talk right now about the OCC's proposed FinTech Charter. I don't know if everybody's aware of that. The OCC, which is the biggest bank regulator in the country, regulates all the national banks, has proposed a charter that would be a special purpose charter for FinTechs, including those working with distributed ledger technology, but where you could do lending and money movement. You can't take deposits. That's the only thing you couldn't do. But, and so a lot of people are looking at this. The FinTech Charter, that's what we want. We've been looking for some guidance. this 50-state solution thing where we have to deal with all the, state money transmitter regulators or whatever is a big headache. This FinTech Charter, finally. And the problem is, if you're a small startup, or, I guess all startups are small to begin with, it's likely that this is not a good choice for you just because what the OCC is going to put into the requirements documents will be fairly high capital requirements. A very experienced directors and operational people with regard to banking, and it will take a long time. So startups tend not to have money or time. They have lots of energy and enthusiasm, but no money or time. And so working with a big regulator like the OCC could be a very frustrating and ultimately fruitless operation, just because you can go through the charter process and not get a charter because you can't meet the requirements. You can't meet the, millions and millions of dollars in capital or whatever it is. So I'm not sure that's the sort of saving, the thing that's going to save everybody, and give them guidance and help them to not have to deal with 50 state regulators on money transmitter or lending issues. What's going to happen for DLT is that it's going to be regulated based on how it's used. So people always say, oh, how's it going to be regulated? Well, that's a hard question. That's like asking how the internet's going to be regulated. It's regulated how you use it. So if you're using it to provide financial services, then the people that regulate financial services will have a say in that. Notably the OCC. If the big banks, like these consortiums, the R3 and others, the big banks are all involved in moving money and information amongst each other, well then their regulators will want to make sure that this technology meets certain standards. So they will likely put into place standards of how this technology has to work and how secure it has to be and all of this stuff. So that's where those regulations will come in. It'll be in the application of the technology. They won't regulate the technology itself, but the use of the technology. I just got back from talking at the EU Parliament about this very thing, about regulation of the blockchain, or DLT, and listening to them, the parliamentarians sort of bounce back and forth these ideas, and as you've all said, there's a lot of use cases being bounced around right now, and the question is how to regulate. And in something like this, there's going to be standards set, sure, but can we get international standards? And that is going to be the trick. Because if we're moving money or property or information across borders, that is going to be something that requires a lot of cooperation amongst lots of countries, and I'm not sure we're there right now. With the current administration, I'm not sure how that's going to go. So it was a very interesting place to be in Brussels a couple weeks ago, discussing basically international standards for DLT. Anyway, that's how I see regulation.
Easy for me to say. I actually agree with pretty much everything that was said. I will say, however, a couple of things. One, governments are very, very good at protecting incumbents across the board. I think that will happen. That is happening. I think you should expect that. Two, in the U.S. and I believe in the EU, legislative change is very, very hard to achieve. And certainly in the U.S., it's essentially, it's not going to happen, right? So we are looking at the regulatory structures that exist, and I don't expect new ones to be created. I think we will be playing under one of the current regulators, which will somehow expand what they're doing to fit this. But if you think about it, in America, most of our regulatory systems were put in place sometime between the 1920s and the 1960s. And they're now going to expand to regulate digital currency and blockchain stuff, but I'm talking specifically about digital currency here. The CFTC, the Commodity Futures Trading Commission, has indicated an interest in regulating digital currency in some form or fashion. And what's interesting about that is you think back to their core mission really is trading pork bellies. I mean, literally the bellies of pigs. And now they're taking those rules and they're applying them to digital currency, which seems kind of insane, but that's the way it's going. And I would expect that to play out. I would expect that to continue to play out. As Veronica mentions, absolutely true. It depends on what you're trying to do as to who's regulating you. I don't think it's a tenable situation. I think there will be change at some point because we do have something new and it doesn't fit neatly into the boxes that exist. I can tell you as an exchange operator, I have no interest in being regulated by 4 or 5 federal entities. That's just not going to work.
You guys aren't interested in listing pork bellies on?
Well, we could do that, but the upshot of that, though, is if we have to deal in the states with the SEC and with the CFTC and with a banking regulator, it's just not going to work. There's just too much of a regulatory overhang. And so we have to be very careful about how we navigate that. Should also mention that we are regulated as a money transmitter in the 50 states, right? We've got 40 licenses. And that sounds like a horrible situation. It's a pain to get there. Once you get there, it's not that bad. But it is an awful lot of work to get there. So we're also licensed, I should say, we got an e-money license in the UK. And we're going through that process over there. Again, the regulatory systems are not in place. They're going to have to adapt. They will adapt. It'll take a while for them to adapt. And the innovators are much, much, much more nimble than the regulators. And so I think the regulators will be chasing it for quite some time.
So I think we're almost running out of time here. I want to give a few minutes for questions.
Not trying to sound like an anarchist here, but is there any way to get the regulators to sit down and let the industry and innovation happen? I lived through the creation of the internet and cloud and all of this stuff, and it was never an issue. And it just seems ridiculous that the rest of the world is progressing and we're just overwhelmed by all this crazy regulation where I don't see very much value.
So there isn't a lot of regulation yet, right? There's no regulations of DLT yet. But when you start to use it for something, and particularly when you're talking about people's money or information that's very sensitive, yeah, the government and the regulators see their obligation to protect people from whatever it is that's out there. They take that pretty seriously. The problem is they're not always the most educated on what the technology is, what the actual dangers of the technology are, what the benefits of the technology are, how it can benefit consumers as opposed to just harm them. Their job is to protect from harm, not necessarily to help innovate. A good example of that is that in the UK, the FCA, the banking regulator there, the Financial Conduct Authority, has a Project Innovate, and their motto is essentially what they've said is, we want to foster innovation, we want to encourage innovation. So they have sandboxes there, regulatory sandboxes, where you can pilot things without too much regulation to see how it goes. In contrast, the US analogous regulator, the OCC, has said we don't want to stifle innovation. Not stifling innovation is very different from fostering and encouraging innovation. Those are different things, different missions entirely. So you can take a very business protective or consumer protective stance. You can take a sort of entrepreneurial stance. Governments have a hard time with entrepreneurial stuff.
So we need the regulations to exist to protect the consumers in the markets from inherent risks. And with this new technology, we're going to be seeing new business models which will bring new risks that need to be regulated. We're really slow here in the United States. Getting them to sit down is a great starting point, but that's not even going to solve our problems for another few years. It would be in the best interest to find the markets that are already working with people. Dubai, Abu Dhabi, Gibraltar, I think England's setting up a sandbox. Finding these places where they're saying, come in, we'll work with you, we're going to suspend these traditional regulations, we're going to see your business model, we're going to see the risks that are inherent in it, and then go implement and work with it. And I think that's just as a startup, right? This is the classic battle of incumbent versus startup, where they're big and slow and bureaucratic and we're fast and nimble and want to execute. Go find where you can execute, and that's your best opportunity.
I would just throw out a contrarian view out there that certain regulations, specific regulations, is going to be necessary for the adoption of blockchain, right? You're already seeing, whether you call them ICOs or whatever else, that people are shying away from the US because there's not regulatory clarity on whether that's considered a security or not. Some other areas like a record on the blockchain, is that considered legally, a legal record that's admissible in court? Right? Unless there's some clarity in that, then it's just kind of a nice, happy scratch paper. And there's an official set of records that's somewhere else, right? Like digitally native assets on the blockchain, right? Are they going to be recognized as such, Right, like back in the days, until you had like actual recognition of like, say, a digital signature, electronic signature is the equivalent of a physical signature, how many of us had to print out something, sign it, take a picture of it, and send it back, right? Like still, and then you're stuck holding onto this piece of paper. Until some regulations are in place, actually, I feel like certain use cases of blockchain are gonna be held back.
Again, everybody's right, you know. I will say that there's an opportunity for industry to get together. And one of the things I'm actually very interested in is whether, in the world of digital currency and exchanges and brokerages, if we were to get together and to suggest a regulatory system or an entry into a voluntary regulatory system, that may take some of the larger regulatory overhang away. But I do think we need, before we're going to get, say, institutional investors in the space, there's going to need to be some kind of stamp of approval from some governmental entity. And that's not in place yet. I think it's going to be a while till that gets there.
Go ahead. Yeah, thank you. My question involves new accounts and regulation. Finding that most businesses fail because of lack of good customer service and opening up accounts. They want to communicate and talk over the internet. There's no phone access. What is the regulation in new accounts, and how can industry get better to service the customers, new customers?
In terms of digital currency, I can address some of that, and it's a major challenge, a major challenge, and it comes from a number of things. One is that we've got the KYC, AML, and other obligations we have with our regulators and with our banking partners, who also impose know your client obligations onto, in our case, an exchange and brokerage. So you take that and then you combine it with a startup that is growing like crazy, and it's a very difficult thing to balance, and it's something that we're struggling with, and it's getting a lot of attention in our company right now. Obviously, the goal is to get the best customer experience possible. I think it's one of those things that is a bit of a growing pain right now that we're trying to get through. We're determined to do it, but it's a real challenge.
I think, are you referring to what he's talking about, like the gathering of identifying information on the way in to get an account? Right, so they're asking you for name, SOC, address, date of birth, that sort of thing. That's all from the Bank Secrecy Act to combat money laundering and financing of crime, and so I don't see us getting rid of that anytime soon. There are ways to streamline that process that financial institutions and exchanges can use now, where they get, they can ping bits of information around to other databases and confirm you are who you say you are, but the fact of having to verify identity is not going anywhere. Uh-huh. Right, so like a consumer bill of rights situation, like you as a bank customer or as a Coinbase customer should get a call back within X number of seconds, or you have your problem resolved with, you looking for that sort of thing? That's more of an FTC, I think, there are agencies that are in charge of that, not a priority. I think it's very, as long as they're not misleading anyone or misrepresenting anything, I think it's basically a market condition situation. You will stop using those, companies that you don't feel give you good service.
You guys have anything to add to that?
Yeah, one more quick comment, which is, if the companies are going out of business because their customer service is so poor, from a regulatory standpoint, their job is done. There's nothing to do, right? The market is enforcing the right behavior. But you kind of have the magazine subscription model. It's really easy to get, turn fiat into this currency and really, really hard to get it back. I can see sort of, FTC getting involved in things like that. Yeah, exactly.
Anybody else? So we're pretty much out of time, but I'm sure myself and the rest of the panelists will be here. If you have any additional questions, I want to thank Michael and everybody who's put together this great presentation, this whole conference. And thank you for your time, everyone. Have a good afternoon.